man, so Bitcoin is running into a trap which could send it as low as 16,000 and maybe back down to that 15,500 mark. In yesterday's video, I shared with you that Bitcoin was running into its daily EMA ribbon, and you can see on today's candle a violent rejection to the downside. I'm going to share with you where I think this could be heading, and more importantly, what needs to happen for us to recover from here. Markets are starting to panic regarding thoughts that we could be heading into a deep recession in 2023. We've also got some news on Binance, who just revealed the findings of their audit, as well as Chainlink, who have just made a huge announcement, which if they made during the bull market, could have led to a huge explosion, but many people are not giving it the respect it deserves. So we're going to cover that off and a lot more. Smash up likes. Don't forget to subscribe, guys. As you can see, I've still got this croaky voice, but we're going to crack on. As you can see, stock market here today. Let's get a quick refresh, but you can see it's been a volatile day in the stock market. Markets don't really know what direction they want to head into. Currently, the Nasdaq down 0.5%. You got the S&P flat and the Dow Jones flat, but it doesn't tell you the full story, because if you look here on the S&P and take this daily candle, which is today, you opened up here at 392, you fell as low as 391, and then you had a high of 395. So it's been a hugely volatile day here today, with investors uncertain about the outlook for 2023. And December is often a time, particularly in traditional finance, I know given my experience of spending many years in traditional finance, that investors and traders would sit back and try to analyze. They become very reflective in December. They try to analyze what they think could happen in the next year. And you can currently see that markets are starting to get worried that perhaps a recession is what's going to happen. Perhaps Jerome Powell can no longer navigate that soft landing, which at some point he thought he could. So they're thinking, okay, maybe a recession is going to be needed to bring down this sticky inflation. And that is why we're seeing this skittishness in the markets here as we go to close out 2022. So we've got the SPY here on tentative ground. You can see the QQQ, the Nasdaq down 0.5%, as we're seeing, losing its daily EMA ribbon. And this is an important note here. If we close below our daily EMA ribbon, that could be a change of trend here for the Nasdaq. But the S&P is trying its best to bounce from its daily EMA ribbon. So it's important that we take a look at this here. Now, at the same time, you're seeing that Bitcoin is getting rejected from the underside of its daily EMA ribbon. This is a very strong bearish daily EMA ribbon, as you can see from the point we flipped back on the 8th of November, when we know what happened. We saw that the ribbon started expanding. And again, if you guys don't understand how EMA ribbons work, take advantage of the course below, ijaz.uk/TA. It's completely free. I'm not selling you this $1,000 course. I put it out there for free, so you don't have any excuses to learn the content. A new crypto trader is born every single day, and that is why I put that course out there, so everybody has a fighting chance. You shouldn't have to say, oh, I need to spend $10,000 to learn how to trade or invest in crypto. No, go watch that course below. It's completely free. You won't be a penny out of pocket, and you can learn EMA ribbon, head and shoulders pattern, how I trade, all the different things that you need to know. It's all there. Go learn it. So as you can see, we're running into this EMA ribbon, and if you understand the dynamics of an EMA ribbon, it's very hard once it's extended, once the ribbon has such great levels of stretch, it's hard to penetrate it back to the upside. I did mention this 17,600 level is going to be a key level. This was our June low. This is where we held support. We stopped the bleeding after the Terra Luna crisis at 17,600, and we worked our way up towards 25. Okay, I can show you that here. We then worked our way all the way up here to 25. Then we came down, we tried to recover back up, boom, FTX takes us all the way down to 15,500. So if we're unable to get above this 17,600 level, we've then got to factor in the fact that maybe, just maybe, not only will we need to come back to support here, this horizontal support at 16,200, sorry, but if we lose that level, we could be coming back to these lows at 15,500 to see if those were truly the bottom levels. And that is what's going to happen here. So we need to build some strength, and we need some serious volume. And coming onto the volume, this is the one thing we have in our favor now. Yes, we have a big red candlestick here today, but the volume isn't huge, which is good. Yesterday's volume on the green candle was bigger. So we need to see, how does this play out over the next 8 hours? Does the volume come in and continue to finish with a big red candlestick down towards, let's say, the 16,500 level? Then we know that the bears are in control, and this could be quite painful to the downside. But here's what's interesting. Normally, when you see Bitcoin falling to the downside, it's inversely correlated to the dollar index. But the dollar index is having a bad day today as well. So you're seeing the dollar index fall here today, which just goes to show you that the market is really confused right now. Okay, there is no clear basis of a direction. Markets are panicked. They're unsure where they want to go, and they're uncertain about the horizon for 2023. And we can't blame them. If we look at the week we've just had last week, and we look at the data that came out, I mean, we're getting slapped from left to right, and it's just hugely confusing. And then if you want to add on the fact that we're in crypto, where we've got this whole FTX drama and all this other stuff going on, what a hugely difficult time to navigate the market, right? We're in a tightening environment where monetary policy is being tightened. We then saw that the private jobs figure showed that the labor market was softening. But then the non-farm payrolls came out on Friday, showed that it was not actually softening, that it was actually quite tight still. So we're in this huge position. We then had Jerome Powell coming out and saying, yep, I need to be dovish. I'm probably going to do 50 basis points in the next meeting. But the market isn't fully believing him, right? So we're in this hugely volatile, uncertain market. If there's one thing you need to know as a trader or an investor, it doesn't matter if the markets are generally going in one direction or the other or ranging. What investors and traders hate is when markets are unpredictable. It's the uncertainty which makes investing and trading very, very difficult. If I could tell you that a stock price was going to go from $10 to $2 in a linear fashion, you guys would be able to trade that very successfully. If I said to you it was going to go from $2 to $10, you guys would be able to trade that successfully. If I told you that a stock price was going to go from 2 to 4, back down to 2, back up to 4, then 2, then 4, then 2, you'll be able to trade that successfully in a range as well. But what you can't do is trade a volatile market where every single piece of data that is coming out is throwing the markets. And what's making that even harder for crypto is every time you look, there's something new coming out which is throwing the market as well. Whether it's Sam Bankman-Fried and which lawyer he's hired, who cares, right? But it's moving markets because markets are very jittery right now. Here's one interesting thing which I did want to remind you from kind of a bird's eye point of view, just to remind you of what is going on in the macro picture, because sometimes we spend so long in the nitty-gritty, in the day-to-day of looking at the charts, and we forget that over 20%, almost 25% of the Bitcoin supply was last active 5+ years ago. Okay, remember, what is the thesis of Bitcoin? Bitcoin is a fixed supply. There's not going to suddenly be any more that comes out of anywhere. Over a fifth and nearly a quarter of the whole supply has not moved in over 5 years. I would hazard to guess that a lot of you guys watching right now have not been investing for close to 5 years, right? So this is showing you that this is only going to become harder and harder when people finally cotton on, when the millionaires and the billionaires finally start to cotton on that they need to get exposure to this asset. And I don't mean in a huge way. I mean, we're talking, a billionaire wakes up and goes, you know what? I'm going to speak to my financial manager because I need to put 1 to 2% in this thing they call Bitcoin. I don't know if it's true. I don't know if it's the right thing. I just need to put 1 or 2% in it. That's going to be huge shakes in the market, right? And when all those millionaires and billionaires decide to do that, they're going to quickly realize that there is not enough Bitcoin to go around. And that's the thing here. A lot of people are confusing this for the fact that everybody needs to think that Bitcoin is a solution for humanity for the Bitcoin price to move. That's not how it works. As you get the different levels of adoption, different people start to allocate different amounts. When you look at the previous run-up to 64 and 69, $1,000 on Bitcoin. A lot of that was fueled by El Salvador, Tesla taking on Bitcoin, Block with Jack Dorsey taking on Bitcoin, a few companies adding it to their balance sheet, even a futures ETF. We've not even had a spot ETF yet. When these things start to happen, the demand from Bitcoin, left, right, front, back, is going to start to pick up. And remember, that fixed supply where there's no inflation is what's going to ultimately create that supply shock and therefore allow the price to move to the upside. So really important metric for us to look at. Also, just to put this on your radar as well, Binance did release the findings of their audits from a place called Mazars. They performed a proof of reserve and proof of liabilities audit just to prove that if they've got a liability to you, that you've deposited 1 Bitcoin, they have that equivalent 1 Bitcoin sitting there waiting for you to redeem. And according to Mazars, they're over collateralized to 1%. So they hold 101% of the stuff that they need to be holding. Good news, and we can move on. Hopefully that can put away some of the fear, uncertainty, and we can move on. Also, for those of you who've been watching my channel for a long time, you know I'm a big proponent for Chainlink, one of the blue chips in my mind, something which I continually like to dollar cost average in. And as you can see here, they've now launched their staking service to increase the security of their Oracle services. Remember, Chainlink is a data Oracle provider. They were the first to do it and they're the best to do it, and they've got all the best partnerships. You guys can do your research into Chainlink, but in essence, what they're now doing is allowing you to stake. So if for all of you guys who've been dollar cost averaging into Chainlink or you've got a position in Chainlink, you can now stake this natively and I think get a yield of about 4.5%, I think is what it's starting out at, which is great news. And again, this is the kind of news that if this was in a bull market, this price would be pumping. Chainlink price would be pumping. But because of the environment we're in, we're not getting that pump. We're not getting a huge move. I mean, if we could take a look here to see what movement did we get on Chainlink. Here you go, and you're down 4% with the wider market. So this is definitely not benefiting from that. But if you're looking at your portfolio and you're looking to see what is being done good and what's not being done good, this is a major green tick. right? If I'm sitting here and I've got my portfolio and I see that Chainlink has done this and the market's not moving, great. I'm ticking that box, because if you stay out the headlines and you just keep doing great things like this, that is what I want the projects in my portfolio to be doing. I don't want you in the headlines for this or this drama, or you doing this or this or this. No. Just if you do a great thing, fine, publish it in the news. Otherwise, be quiet and keep building. We don't need the hype. Remember, you only need to exit your positions once. You only need that hype level to come in once when you're looking to trim your positions in a project. If you have long-term belief in a project, then you don't need to worry about that at all. You just need them to keep building and continue to become a great project that you believed it would become. Another interesting tweet from Dan, which I wanted to share with you. I'm not sharing this because of the actual, the way he intended to share it, but actually something that I've been thinking about, and he's just done the numbers for me, which saves me some time. But remember, when we look at Bitcoin or any other crypto asset, this is just basic mathematics, but a lot of people don't actually cotton onto it. If Bitcoin is 75% from all-time highs, I know it sounds common sense, but you don't do a 75% return to get back to where you were, right? You need over 300%. So I wanted to put this out there for you to remind you that if you're buying now, if you're managing to buy when the blood is in the markets, right, when it's painful, when we're still at fear, I know it's notched up a little bit today. We're at 29 here on the fear and greed index, but it's still fearful, right? It's not here in the neutral area. It's definitely not greedy, and it's definitely not extreme greed, which is what we saw back in November 2021 when we were trading together. But it is fearful. And if you're managing to buy now, if you buy Bitcoin now and it just returns to all-time high, and this is the powerful thing, for a cryptocurrency to return to an all-time high, it's far easier than for it to get a crazy projection to the upside, right? Or a new coin, which you're hoping can achieve a price. That's price discovery. But for something like Bitcoin, which you just want it to get to all-time high, it's proven it can get to 69,000, right? And you're looking at a 300% return. ADA to get back to all-time high, 893%. Avalanche, almost 1,000%. XRP, again, not one I hold, 400%. ETH, 287%, Litecoin 433%, Link, which we just spoke about, 639%, Matic, which has relatively held up really well and performed really well in this bear market, probably the outstanding performer of 2022, again, one of the blue chips in our portfolio, 230%. So just a reminder for you guys that the dollar return on any buying you're doing now is hugely skewed in your favor as we move into a bull market. But it's not easy to buy right now. And that is why it's risk versus return. If you've got conviction, if you're able to buy now because you believe in a project now, you're going to get more rewarded than somebody who buys when Bitcoin's back at 40,000, 50,000, 60,000, 70,000. And it reminds me of something a successful investor would say, and that is you will buy Bitcoin or you can replace that with any cryptocurrency at the price you deserve. And I'll add that it's based on your conviction, based on the research that you do. That's ultimately when the markets are red, when it's painful, makes you take out your wallet and say, you know what? I believe in this. I'm going to buy a little bit more. And over the last couple of days, while I've been sick, I have been doing that. I've been taking out my wallet and I've just been nibbling on a few of my favorite projects. And again, if you want to know which type of projects I'm nibbling and as and when I do nibble those, consider joining our course member live streams, Ijaz.uk/member. We do 3 times weekly live streams. You guys can join us on there where we talk tokenomics, we talk about different trading patterns, talk about different things that I'm doing in the market, and generally just a touch point for you guys to ask questions to during this difficult bear market. Hope you guys enjoyed this video. Don't forget to smash the likes. Don't forget to subscribe. Check out the links in the description. And I'll see you in the next one.